And I want to thank you for taking the time to view this video. The previous two videos talked about what a reverse mortgage is, and the second video talked about some of the questions you need to ask before you get a reverse mortgage. And in this video we're going to look at some of the different payment options that are available to you on a reverse mortgage. So basically there are three types of payment options available to you. One is a fixed rate lump sum distribution. The second one is a line of credit, which is a variable rate. And the third option is a variable rate monthly payment. So we're going to look at each one of these and determine when it should be used in each scenario. So the first option that's available to you would be a fixed rate lump sum distribution. So let's look at an example. Let's assume you have a house worth $200,000. And let's assume we can provide you with $125,000 based upon your age. Under the first scenario, you'd receive all the money at one time and you'd have a fixed rate loan for the life of the loan. This is a really good scenario, or solution I should say, if you know exactly how much you need and you know you're going to use most of that money. Usually a person would have like an existing first mortgage that they want to pay off, and the lump sum would be used to pay off the majority, or if not all, of that loan. So it's a great scenario for a lump sum distribution when you know all the money is going to be used. Now the second scenario would be a line of credit. Under this solution, the customer usually doesn't want all the money. So let's go back to our example. Let's say $125,000 is available, and let's say you only need $50,000. Well, if you took the $50,000 under the line of credit, you'd have the money available to you. You would also have $75,000 available on a line. So if you needed that money in the future, you'd be able to make a draw request and have that money sent to you. So if you need flexibility and you don't need all the money right up front, and you think it may be over a period of years, the line of credit may be a better option to you. The line of credit does have a variable rate, but remember, you're not making a payment on this loan, but whatever balance you've accrued will have the interest rate applied to that each month as it goes up and down. An important feature that you recognize on the line of credit is that whatever you've not used would grow at the corresponding interest rate. So let's use an example, tell you what I mean. Let's assume, just for a conversation, you have $100,000 available on a line of credit, and let's assume the interest rate is 3%, just to pick a number. At the end of the year, your line of credit would have grown from $100,000 to approximately $103,000. So meaning whatever rate that you're accruing what you've borrowed, the line of credit would grow by that corresponding rate. So it's a very powerful feature, because the longer you don't use the line, the larger the line will become, giving you the ability to borrow more in the future if you need it. If you never need to use it again, that's fine. You don't have to, but it just means more money is available to you later. Now the last option is a monthly payment. Under this option, you'd receive a monthly payment for as long as you live in the home. We'll take your age, we'll take the value of the house, and we'll take the corresponding interest rate, which is currently, it's a variable rate on this option, and we'll determine an amount that you get every month. It doesn't matter how long you live in the home. As long as you're there, you would receive that monthly payment. Some customers want to put a different twist on this, and we have the ability to give you a payment over a certain number of years. It may be 5 years, 10 years, 20, whatever you would like. We can calculate how much money you could get every month. Some customers might want to take it different. They say, I want a specific dollar amount per month. Well, then we can calculate how long you could get that specific dollar amount. The important thing to remember under the payment option is the first option under it, you get it for the life of the loan. You don't have to worry about receiving your money. If you decide to take a specific dollar amount or a specific amount of time, then those payments would stop after that time period. So it's something important to keep in mind. Of the three options, the lump sum distribution, the line of credit, or the monthly payment is the least popular. The most popular currently is the fixed rate lump sum distribution, followed by the line of credit. But the most important thing to realize is you need to take the product that works best for you and what you're trying to solve. And remember from our other video, one of the most important questions is, what am I trying to solve? then we can take that information and then we can take the product that best solves that goal you're trying to achieve. And so one of those three will either solve it or it won't. And if you do the analysis, you can determine the positives and the negatives of each one of those options and make it the proper decision for you. So if I can be of assistance in any way, please feel free to give me a call. Any customers that reside in Texas, I'd be more than happy to assist them work up an analysis. So please feel free to email or call.